Naira remains relatively stable in the interbank market after the Nigeria's Monetary Policy Committee opted to keep its key rate unchanged Tuesday. Now, joining us to discuss activity in the fixed income and currency markets is Augustine Nwachukwu, an analyst at Stanbic IBC Global Markets. Thank you so much, Augustine, for joining us. So, I guess the story for this week is that the Naira has remained relatively stable after that MPC decision. I guess no major surprises, but the tone of the MPC suggests that we are not at the end of that tightening cycle just yet. Now, I want to get your thoughts on first of all, the key drivers of the Naira stability that we have seen up to this point.
Okay, thank you, Wale. Basically, the Naira has been stable, like you earlier mentioned, and this is driven out of the flows we've seen from the oil sector, and we've seen less outflows from the offshore guys, more like we've seen inflows from them this time around. Those guys also watch our currency, and so every time you see above 159 levels, they also want to take advantage of the depreciation in the currency. So we've seen depreciation every time it gets to 159. They always come to the markets to inflow dollars and take advantage of the rate. Right.
So how do you explain that point? So essentially, they are trading the volatility in the exchange rate. Is that what I hear you saying?
Okay, so basically what they do is they call carry trade. So in fact, when they see the exchange rate at 159, they also know the timing of when the currency appreciates with inflows from oil sector and the likes.
Right.
So the timing is where the exchange rate gets to above 159. Those guys, they come in, sell, put the Naira in short-term T-bills, and by the time the inflows coming from the oil companies, it appreciates to about 157 levels. They come and take the monies back. So basically, this is what you call hot money. They've been trading for a while, yeah.
Right, of course, hot money was in focus after the MPC, the central bank governor, indicating that perhaps as much as $20 billion is hot money in Nigeria's system. And that's maybe just about half of the current reserves we have in the market. I want to get your thoughts about the point here. How assuring were the MPC's comments for foreign investors in your view? Because we know the activities of foreign investors will be key going forward for the strength of the Naira.
Well, we've seen a slowdown in activities in the foreign investments, basically because of the tapering expectation from the US, which is expected in 2014. But after yesterday, we were hearing a lot of insinuations that the tapering will start in December. So we noticed that in 2014, we might see much spending from the politics, and all the fiscal policy needs to be tightened so that we will see exchange rates being held. So by the time you increase the interest rate, this will help because you're going to see a global increase in interest rates across board by the time this tapering starts. So Nigeria would have to respond in the same vein to keep our currency in check. So I would say Sanusi has done well in favor of him. We've seen exchange rates stable, and he's going to leave that legacy. So he's going to keep doing all he can to keep the exchange rate within reach.
So are you confident that the Naira will be stable going into next year? Well, at least until Sanusi has to step down in May.
Well, I would agree that we will see stability across for now. We haven't seen much panic from anybody. So we're going to see stability in the exchange rate up until maybe when tapering starts in the US or when Sanusi's exit begins.
All right, so Sanusi key to the analysis there. Okay, let's talk a bit about the fixed income market. Can you just talk us through activity there? What are we seeing in the markets right now? We've seen a lot of focus on T-bills recently. Did that play out today as well?
Well, that's the trend we've seen all through the week. We've seen more of offshore investors switching from bonds to the treasury bills market. And so we do not expect to see too much interest in the bonds right now. We're only seeing more interest in the T-bills. People are not sure of where interest rates will be, especially from what Sanusi said, where he would do some tightening to keep the exchange rate stable. So people are just staying short at the short end of the curve, which is the T-bills. So we'll see more of the interest in T-bills going forward.
All right, let's talk a bit about your thoughts on the liquidity we're seeing in the money market right now. I hear that this is really linked to the disbursement of federal allocations.
Yes, we've seen market liquidity to the tune of 480 billion today, and that buoyed the OMO auctions they had today. So CBN mopped up over 140 billion in the market today via OMO bills of 126 and 147 days at the rate of 11.95 and 12% respectively. We expect to see similar mop-up if, as long as we see this kind of liquidity in the system. And so we also saw a maturity of an OMO bill today of 140 billion,
right,
which CBN had to effectively mop up.
Right. So
the OMO bills, yeah.
All right, so OMO has resumed, and it's become quite expensive for the central bank to continue to do this. Do you anticipate any changes in their approach towards mopping up liquidity?
Unfortunately, I don't think we'll see any change for now, except when they kind of tighten the interest rates or do other factors. But right now, I think the simplest thing they do is to do the OMO auctions and mop up the T-bills.
All right, Augustine.